yeah, definitely. I was before we came on the air. Yeah.
Yeah. Dude,
So
so
yeah,
markets
I
is
mean, I'm hoping to
outrageously
buy the
expensive
house
right
this
now.
year.
Yeah.
Oh yeah. Oh yeah. It's crazy everything that's happening in the market right now. It's just like the housing market just in the area that I was looking at, like 2000 and 2000 when I first moved to where I live now in Atlanta. It was that time like houses were like maybe 180 to 200, and now like my buddy's house is now worth like $300,000, and he bought it for like 200 maybe, and
How many
it
years
is
ago was
just
that?
crazy. It's just crazy.
Was that like 5 years ago, 10 years ago?
That was 2000, and he bought his house in 2019, so 3 years ago.
Dude, what the
That's
heck?
what I'm saying. Because so what happened was like 2019, he bought his house, and then I had just moved to town. I was just getting settled in, and then in 2020, another one of our friends bought his, and I was like, okay, cool. Like I'm also gonna try and buy mine, 2020 as well. But I was in school, so I was also like doing my master's, so I couldn't even like buy a house in 2020, 2000, and I finished school at the end of 2020, so I didn't have the money for buying a house. Everything was going to school. And so like so after that I brought the money back out and saved up in 2021, but everything happened after the pandemic. The housing markets went haywire. Like, a lot of people took their houses off the market and then just went everything just went crazy. So it's just like all the houses, like the prices that I was looking at before of like, oh, I'll get a house probably around like, it'll be around 200s maybe in the top end. Now it's like you gotta be willing to buy something in like 250s and above, because in the area that I'm trying to be is like nothing else is like available. If not, I was just like, man, it's just crazy the way like this housing market has just boomed and just changed on us so quickly.
Yeah, dude.
It's crazy.
Yeah.
It's just crazy.
Do you think what we're seeing in the stock market with kind of a meltdown in the last month or so, with a meltdown potentially starting to spread to larger and larger cap stocks, do you think that's going to come around? Like I've been reading articles talking about it's like an everything bubble, like crypto, stocks, real estate, like nothing is safe and everything is going to be settling down big time. Like what how do you feel about that as somebody who's looking for a house right now?
I mean, I don't. The thing about houses versus any other like houses versus like stocks or anything is like houses. Most people buy a house not because of like not just because it's like a good investment, but we also buy a house because we've gotten to a certain point in life.
Yeah.
So it's like I don't like, to be honest, as long as I am buying a house that I can afford and is under my price range, and I know that I can cover all my bills and still be able to live the life that I want to live and do all the things I want to do. It doesn't really matter to me like what's happening in the housing market per se, and I
Totally.
think a
Yeah.
lot of people are like that as well when it comes to housing.
Totally.
So like I don't think like it's going to change much of anything. Like they're talking about like it will slow things down a little bit for sure, especially with interest rates going up. Because when interest rates are going up, it means like now that houses are so expensive, people can't afford the same size house anymore. So it will push prices down a little bit, but I don't expect like a bubble or anything like that. Because the other thing that in order for a bubble to be happening in real estate, it requires like a lot more supply, and there's not that much supply in houses. I mean, every time, even before I wanted to buy a house, I was like, oh, maybe I can buy a duplex. And when I said that to my real estate agent, she started laughing, and she started laughing because she pulled up the MLS thing. And she was like, in the entire state of Georgia, at that point, there were only 6 duplexes available.
Dude.
6 for an entire state. So she was just like, yeah, I mean, so it's not really a like, we're not in 2008 anymore, and I think a lot of people keep on like trying to make that comparison back to 2008, but it's not the same way. Like the people who are buying houses now, their credit level is like they're the pristine people to be buying a house. Like they have proper down payment, they have a job, they can, all the things. Their credit is a high credit score. It's all the things that they put into place after that whole real estate bubble and housing market crash happened, and forced banks to actually be like, you can't just give loans to anybody. Now it's like, so those are the people that are trying to buy a house, And the other thing is a lot of people are moving in from all over the place. Like now you can work from anywhere, so that's affecting housing prices in like Atlanta, for example. So like I just think in general, I don't see a meltdown happening in real estate or anything like that. Actually, I can see a general like instead of housing prices going up like 5, 6, 7, 8% every month, I'll just see like maybe it just stabilize at like 1 to 2% or something like that, or just stays the same for a while.
Yeah.
So,
Yeah, man.
but
Well,
yeah,
I hope you can get your hands on something soon. But at the same time, it's kind of like even if you can't, that might end up working out better if prices settle down. It's hard to say.
Yep.
Dude.
Yeah, it's like the whole thing is just I'm just maybe I keep missing out and missing out and missing out, and I get it, and things are settling back down, and I'm able to get something for much better.
Yeah.
Who knows?
Yeah, dude. One of the things that comes up a lot in the news is they'll talk about the bubble in Japan, and they'll be like, "Oh, we're headed for that bubble like Japan had in the late '80s and stuff." Dude, it's crazy. One of our, are you there? You look like you're lagging. Kelechi, we lost you, man. Sorry, those on the live stream. Yep, he's gone. Come back, dog.
Okay, I'm back.
He's back. Yes.
I'm back. My computer is. This is like. I need a new computer because it's like after a while, my computer just decides no more Wi-Fi for you. And it's like, what do you mean no more Wi-Fi for me? So I'm still, it's all good though. I'm glad I made it back.
I'm glad you did too. And I'm glad probably all 9 of our viewers are glad you made it back too.
Hey, we're telling stories and we're enjoying ourselves.
Yeah. But yeah, so I was talking about the bubble in Japan. And it's crazy because we're actually in the process of selling one of our houses. And it works out nice because we've only had it for 5 years, but we made a decent margin on it. But the neighbors of that house sold their property about, I don't know, 5-6 months ago. And we're talking to them and they're like, we bought this land in the bubble and like in 89 or something like that. And the price collapsed after that and it just recovered, dude.
Oh my god.
That's like 30 years of like zero growth. It just got like drop kicked and didn't recover for like until kind of the last 5 years or something like that, dude. So I really don't like a lot of people say like, oh, we're going to turn into Japan's economy. It's so bad. I think there's like so many other factors that are at play. And it's not going to come back. It's not going to end up like that, I think.
Wow. Yeah. I mean, and the thing is like I tell people, like, especially when it comes to like real estate, unless you're like an investor in real estate where you're buying houses and flipping it or something like that, even if you're just somebody who just buys a house to live in it, as long as you're making your monthly payments, like you're owning the property. So it's just like, it's a shelter. It's like, I just need roof over my head. Yeah. At the end of the day. And at the point in time, you were making the best decision that you could have made for yourself. So yeah, somebody in the chat says expensive is relative. In New Jersey, he bought a $335 house and it's already $520. That is, I couldn't imagine living in the north. Like the price is up there. Oh my gosh.
Yeah, dude. Yeah,
it's so expensive.
My friends in LA where I used to live, they're like, yeah, I bought a new house. It was like $900K. I'm like, dude, baller enough? And then they're like, yeah, it's like a 2-bedroom, 1-bath kind of thing. It's like 70 years old. And I'll show that to my friends. And that's like normal. That's what we grew up with in LA, you know? And so for a lot of my friends, it's just like, no, I'll never own a house, obviously. Like, I don't have $1 million kind of thing. But I'll show that to my friends in Japan, and they flip, dude, because you can get a brand new house, a house that was literally just built, and it'll last you. It's not like the older houses that only last you 25, 30
Mm-hmm.
years. It'll last you
Mm-hmm.
60 or 80 years, and it's like 200 grand kind of thing, you know? So it's super
Yeah.
interesting.
It's
Like,
like,
a lot of economists and stuff will talk smack about Japan, but it's like, dude, we spend like $50 a month on health insurance. I went to the doctor the other day and it was a $2 bill, dude. The guy's building me a
yeah.
custom mouthpiece to fix my jaw. And he's like
Wow.
handcrafting it every few months. I go in and he like realigns it. And because I got this gap here. I'm dentally retarded. And he'll, and he'll work on it. And then, yeah, I go check out and it's like $2.10. I'm like, dude,
Wow.
and then
Bruh.
a lot of my friends who are kind of our age are like, yeah, I'm gonna build a house now. It's like not a big deal. So like you could talk smack about Japan, but it's like pretty easy to live here, dude.
Yeah. We like, there's a lot of stuff that we take for granted or we overrate America for, and we put America on like this pedestal of like, we are number one in so many, but it's like, in so many areas, we're just falling short. It's like, in America, you may be able to like build up, and it has the gung ho culture of like, you can build a bunch of wealth and different things, but like, there's a lot of other things where it's like, bruh, it's a lot easier if you weren't in the U.S. Like, what is it? They said like, as you get older, 30%. When 30% of GDP is like just from health stuff, that's a bit of a problem.
Wow.
It's a bit of a problem. It's becoming like more and more like, just to live, it costs you basically all your money.
Exactly,
and
dude.
they were talking about that for retirement. Like, they were like, the biggest cost most people have in retirement is just healthcare costs. It's like,
Yeah.
what?
Yeah,
like, just
dude.
to live is costing people, like, not even like to travel or eat or do any of these fancy things. It's just to survive.
Just to like not die. Yeah.
Exactly.
Exactly.
It's like ridiculous.
It's crazy.
But such is the life we chose, I
Seriously.
guess.
Yeah. But zooming back out, we're talking about real estate. The markets are getting obliterated. What's up, Jimmy Lee and Cade Neubauer? We're talking about the markets getting face punched recently. And guys, just so you know, this is Kelechi Waba. He's he's probably the most entertaining finance guy I've seen on YouTube, TikTok.
Oh, you're too kind. Thank
you. I like watching his videos. And I would say, if I had to guess, I would say your investing style is buy and hold, big, large cap, solid companies. I think some of the people watching are probably from Kelechi's audience, and maybe some of them are from mine. But he was probably the one who got me thinking about Intel initially. I was all about AMD, and I did well on AMD, and I was like, AMD's awesome, Intel sucks. And he's like, dude, but Intel's cool, man. And I'd make like 10 videos of AMD, and he'd be in the comment section of each one and be like, dude, there's hope for AMD. And I'm like, shut up, dude. And then I start looking into it, and I'm like, actually, AMD is pretty dope. Actually, it has some potential, And then, lo and behold, my portfolio for the last 2 weeks, like the only green stock is Intel.
It's like, oh man, I remember. I mean, even my investing style, I say usually I'll just buy. I like to say I just buy good businesses at good prices is what I like to say. But even with that, I still venture out, and I bought. I mean, last year, it's crazy. Like, I have a separate portfolio where it's like for crazy picks and stuff like that. So I had like Lemonade in there, and that is down like almost 80% or something like that. It's just getting crushed.
Yeah, dude.
But at the same time, I love looking for good businesses in different stages of life. And Intel, how I even started on Intel was so weird. Like, I watched a YouTube video that was talking about why Intel was sucking. As like, it wasn't even like an investing video. This is one thing for me, like, most of my investing ideas doesn't come from like investing sources. My good investing ideas so far have usually come from like when I'm just like living life. So like,
okay.
Microsoft, when I bought Microsoft a while back, I literally had just watched a video about Satya Nadella was changing the way Microsoft operates, and he's doing a better job than Steve Ballmer. That was like in 2018. I was like, okay, cool. Like, I like Microsoft, and I bought into Microsoft, and that has done amazingly well for me. And then Intel, the same thing happened. I was just watching a background of like how Intel had lost the race against AMD and caused Apple to actually start making their own chips and like all of this stuff. And then around that time, shortly after that, I was like, oh yeah, that sucks. And then it talked about the CEO being a finance guy and not an engineer, and he focusing more and more on like the financial side of things. And I was like, yeah, he sucks. He's terrible. What is he doing? He's not supposed to be there. And then I was like, yeah, I would never buy Intel stock. And then shortly after that, the CEO got fired. And they brought in a guy. They brought in a guy, Pete Gelsinger,
yeah.
that is now the CEO. They brought him back, and I was like, what is he gonna say?
Yeah.
And then he like had his first speech, and the first thing he mentioned was like, we're not going to be pushing those buybacks. And I was like, now I'm excited about this. And I was like, all right, let's see what he's going to say. Then he started talking about like, we need to put more money into fabricating, and we need to put more money into innovation, and we need to just do a whole lot more. And then that just got me excited. And I was like, I'm buying in.
Yeah,
but the problem was, I probably should have gotten out, because the thing went from like 49 to 60 something. And it was, yeah. So it's like, it went all the way to like almost $70 a share.
Wow.
And I was like, I'm long term. And I just kept on riding it. Now it's back to like 53. So I should have probably just like taken my gains and ran, and then maybe bought back in. But you know, it is what it is. But yeah, that's how I got into Intel. I like to just find like these companies that a lot of people are starting to hate on.
Yeah,
and I'm just like, all right, are you actually that bad? Because the other thing is, you look at Intel's financials, and it's like, although they were losing market share to like AMD, they were still growing in market share in other areas as well. So it was just kind of like, and then you look at, Intel has the cash flow to just burn to be able to like innovate as fast as possible, and we're starting to see that with like a lot of the new chips that they're releasing.
Totally,
and it's like they still got it. Like it's not like they just stop. They don't have good engineers, and now they're poaching engineers, which is like, okay, so Intel still got a little bit of juice with them.
Totally, dude.
So
yeah, and I one of the things that attracted me to Intel was how many people hate it, and how it was like falling into the shadow of NVIDIA and AMD and stuff. And it's crazy because I put out actually a lot of my videos recently are Intel, and like nobody cares. Like I get like no views on them, and people are like, Intel's boring, it's stupid, I don't care. And it's like, dude, listen, there's some good stuff going on, man. And it's like, while AMD in the last 2 weeks, while AMD's lost, what is it? Let me pull it up here. It was like something
or something like that.
It's pretty gross. I think we hit like I think we hit 150, dude. Yeah.
AMD is
160. Yeah. And it's like, while all of that's been going on, all the way back down to 120, you know, I was selling. One of my things that I always talk about is dollar cost averaging into a stock, and then dollar cost averaging out of a stock when I see that it's peaked, you know, or it's at least gained a lot, you know. I've been averaging out of AMD and into Intel, and that doesn't mean AMD sucks and Intel's better now, you know. But I think so many new investors are like, dude, but Intel isn't the best. It's not NVIDIA. It's not AMD. And it's like, that's not what we're talking about here. They're all dope companies, and they're all really good. But everybody hates Intel, and that's why it's so undervalued. And everybody loves AMD and Intel, and that's why they're probably kind of not Intel, NVIDIA. And that's why they're, you know, expensive. So I've been, and I guess that
it's hard.
Go ahead.
Yeah, I was just gonna say, like, I think one of the things that a lot of people have to learn, and hopefully through this period of like, I hope this is an extended sell-off that we have, or we've been seeing in the market. I hope that just continues, because a lot of people, we have to learn the difference between like, oh, this company is good, but is it also a good investment right now?
Yeah,
like,
dude.
The company can be good, but is this investment a good one? Like, learning to switch your mindset from like, oh, they make this amazing thing, to like, okay, they make that amazing thing, but like, is this actually a good buy for us right now? Should I be putting more and more money into this thing when I'm picking stock? So that's like one thing that I've had to learn, because I mean, I was, what is it? Like a lot of, I mean, if you look at Lemonade or anything like that, I knew Lemonade was way overpriced, but I was just like, who cares? Now it's like, oh, this is why like they talk so much about like pay attention to the downside risk, which is something that we get excited about something. And the other thing that's like interesting is like I also pay very much attention to like outside of the investing space, because sometimes in the investing space it becomes an echo chamber where like everybody, like we just said, everybody loves AMD, most people hate Intel, everybody is on Nvidia's bandwagon.
Yeah.
But it's like outside of the echo chamber of investing, if you pay attention to like PC guys and them talking about like, oh wow, look at how good Intel chips are doing, or you listen to like them talk about just Nvidia is now like their newest chip was not that big of a leap in value for the bang for buck.
Yeah.
And I pay attention to that a lot more than I do like somebody who talks about like, oh, this is the PE ratio of this stock. Like I'm just like, like I don't care that much about that. It's like, what is the actual technology saying? Like, is the technology going to be something that people want to use or not? And that's what really drives me. And so when I hear like, this is one thing I regret, like AMD from 2019, my little brother was like, he was building a PC. And I was like, oh, what chips are you gonna put in your PC, all this stuff? And he was like, oh, an AMD chip. I was like, AMD? And I didn't think about it at that point in time. But at that point, that was before like the 2020 run that AMD had.
Yeah.
But then I was watching a guy, Dave 2D on YouTube. Yeah. He makes amazing, you know him, right?
Totally, yeah.
Yeah, he makes amazing like tech content. And so I was watching him, and every video he was like, for the best bang for buck right now, it's AMD. Best bang for buck right now, it's AMD.
Yeah.
And I was like, it was like, oh yeah, that's cute. That's real cute. And it was like, there was a wave that was happening that I was completely missing. And now, you get to a lot of people who are holding AMD from like 2019 through now. They're like, all right, cool. I'm just gonna take my gains. And even if they don't choose to take their gains, the stock I don't think is gonna fall 100% back to zero. Yeah. So it's just paying attention to like what are the people saying around us?
Exactly.
Sometimes.
Yeah, dude. And it's fascinating. Like I grew up building computers. My brother was like a super tech nerd, and he taught me how to. I built my first computer with my brother when I was like 7 or something like that, and so I've always kind of had that like just paying attention to the market in the background kind of thing. Mm-hmm. And for years, AMD was like kind of the cheap, like, it's cheap, but maybe that's all you can afford, so you just get it. Everybody really wants Intel kind of thing, and then it started to switch because AMD really started stepping it up. While Intel, you were mentioning all these CEOs, Intel was going through this mode where they're like, basically bean counters were running the company. And they're like, we're spending too much money on engineers, so we have to cut the engineers. And it's like, those are the people that are responsible for the future of your company, dude. Like, yeah. And now Gelsinger, who used to be an engineer, is now running things. And he's like a really genuine guy who kind of understands all of those things. And so I think so that's why I'm excited about it. But yeah, the new reviews for all these Intel chips are like, these are the best. They're like really good bang for the buck. Yep. And Dave 2D put out a video the other day about even like tablets powered by these new Intel chips for mobile that are like, you can play really heavy duty games now. Like you couldn't do that on tablets really until recently, but even Intel's putting those out now. And it's like, this is going to be dope, dude. And then yesterday or today, they just announced a new $20 billion factory they're building in Ohio. And
I just read that.
It's like, dude, Intel is making moves, man.
Yep. Yeah. And that's the cool thing. And but the one thing I'll still say, like Intel, even with their chips, like the advancements they're making, they got to figure out the heat system, because I'm looking at like Intel's chips are awesome performance wise, but then it's like you compare it battery wise to like Apple. And I'll say like, of anything that's happened, the greatest thing that happened was like Apple was like, all right, Intel, we're done with y'all. We're just going to make our own chips. Totally. And like that really like just made Intel like, oh man, we need to do something. Yeah. But Intel is like, their chips are super powerful, but they got to get the performance thing down. Like they produce so much heat. Yeah. That's the one thing, like you watch anybody talk about it, it's like these chips are amazing. but you better have a good cooling system to go along with it.
Yeah.
So, yeah, I'm excited. It's still like we still got it's a long road to go, and I think Intel's going to be pressured during this time. But the cool thing is it also pays a dividend, which makes it easier for a lot of investors to hold.
Yeah.
So I'm excited. I'm excited to see what they can do. I'm excited to see how bad things get in the markets because I mean, the fact that the Nasdaq is already in a correction and we're just in the third week of the year, this year is gonna be painful for a lot of us. It's gonna be something silly happening this year.
Totally. Yeah, dude. You mentioned a minute ago, like watching Intel go up all the way up to like high 60s and then just watching it go back down to the 50s and being like, dang it, I should have sold. Like, one of the things that's really interesting, an interesting dynamic I see on the internet, and I feel like it was birthed out of the whole GameStop and AMC kind of like diamond hands until we die. We're gonna beat these hedgies. We're gonna make them lose all their money, and basically selling was started like people started to look at selling as like you're a weak failure, you're not a good investor, you're a pansy. And I've done videos like Palantir, Nokia, Dropbox, and I'm like, I feel like it's probably going to go down now, so I'm going to sell out a big chunk of my shares. And I would get comments. People are like, dude, you're a paper hands loser. Why are you selling? And I'm like, I don't hate these companies now, but I don't think they're going to keep going up. And there's not a lot of reason for them to keep going up. And a lot of people are just like, you're a noob, dude. And I'm like, that's not the right way to do investing, dude. It's like, and I'm like, you could call me a noob.
That's so true. Like,
yeah.
I don't think people understand. Even for me, there's one thing that I'm trying to learn to understand is like, so most of my investing background is based off of Warren Buffett stuff, right?
Yeah.
Like a lot of my investing background is based off of that. And Warren Buffett always likes to say like, my favorite holding period is forever. But even Warren Buffett sells. Like, he bought Apple in 2000 and whatever it was, like 2000 and I think 2017.
Yeah.
And it grew to a certain point, and he's been selling out of it. Like he sold, if not to say like Apple is a bad company, but he sold portions of it because part of investing, you have to realize those gains at some point.
Yeah.
You have to at least take something and enjoy it, because otherwise it's just paper money. Like, you just like your losses aren't realized until you sell. Your gains aren't realized until you sell either.
Yeah.
Otherwise, it's just paper money. It just sits there. And we have to, that's one thing that, I mean, even for me, it's something that I have to learn, because I'm like big on like, I'm looking for 5-10 years down the road. But it's like, at the same time, if something hits a certain level that you like, we're like, I expect for it to hit this level. And it's like, all right, cool. I'm going to have to take some off the table and then, let the rest ride.
Yeah.
But it's also a balancing act of like, I don't know. I always play this game in my head. I love Peter Lynch. She says that sometimes we cut our flowers to water our weeds. So that's one thing I'm always like questioning is like, if I am gonna sell, where am I gonna put this money? Am I using this money? Like I just talked about buying a house, right? So it's like, that's the beautiful thing, to sell out of a stock so I can use it to buy a house. But if I'm just selling out and the money is just gonna sit, then that's when I'm just like, okay, I'm not about to sell, because I need this money to go be somewhere else. Otherwise, I'm just losing out to inflation. Totally. So it's also like, it's a two-pronged question of like, is it time to sell? And then it's like, what am I gonna do with this money when I do sell? Yeah.
Yeah. One of the tricky things that I think is mentally hard for me to get over, on my brokerage, it's like, it's always showing you the realized and unrealized gains and losses. And kind of over the last few weeks, I'm like, I've been saying this on my channel for like 2 months now, it's going to trend down. It will trend down. So take profits kind of thing and get cash, have cash on hand, because things are going to be on sale soon. And I've taken like a lot of profit, but now my unrealized gain loss chart is like, only the red things remain. There's like no more green, so it's like every time I log into my brokerage, it's just like a sea of red, and like I'm getting all these comments on my videos. People are like, what about skills? What about desktop metal? Like, you recommended these stocks and they're down like 90% now. And I'm like, this is where you don't take losses, And that's why I say, hold on. Like, we're getting into this thing for 5 years. And, news changes and
I
stuff.
think
I'm
people
not as
don't
excited about
hear that.
skills as I was. What's that?
I don't think people hear you when you say that, though.
Yeah.
When you say, like, I'm waiting 5 years or I'm getting in on this for 5 years, I don't think people actually understand what that means of, like, yeah, I'm writing this high and low. Like, this is, I mean, and I don't think people really understand the concept of, like, long-term investing.
Yeah.
Like, I think people, like, 2020 completely warped our entire view of, like, what investing looks like. So
Exactly, dude.
everybody just thinks, like, oh, I buy a stock, it's going to go up. It's
Yeah.
like, no, that's not reality. Like, if you understand, like, when the S&P 500 has back-to-back years of, like, 20+% returns, it's like, historically, we have 7%. So it's like, we can't expect to just continue having these world-beating returns all the time. Like, at some point, things are going to normalize, and we're just going to have to, like, learn to deal with the current situation that we're in. And
Yeah.
I think now people are starting to learn those lessons. And I thought, like, in my noob self, we had that tech sell-off in October of 2020. Like, I think it was like October, November, where things just dropped drastically.
Yeah.
And I was like, this is a perfect learning opportunity for most people. I thought people would learn from that.
Yeah.
But nope. 2021 starts, we had GameStop. Then it was just like, we were just running with it. And I was just like, oh, yeah, so this is how investing works now for the time being. And, we always have these moments. And it may not explode in spectacular fashion, but it will just take its time. Like, eventually things come back to earth. And it's like one of my favorite quotes from Howard Marks is, trees don't grow to the skies, but not all grass is weeds. So it's like learning to balance both of those things out. I love that quote because it just keeps me normalized of, like, oh, okay.
Yeah, dude. And I think there was this huge influx of new investors in 2020.
Mm-hmm.
And, like, so many people are like, yeah, I made like 150% this year. Like, stock market's easy. I got this kind of thing. and probably 80% of those people's returns in 2021 were like negative or like single digit kind of thing,
Mm-hmm.
And it's tricky, I think, as a YouTuber, because part of the challenge for us to get good knowledge, to get good information to our people is, like, we have to sell it to them. And if the thumbnail or the title, like, isn't mind-blowing or isn't like, oh my god, buy this stock now, it's gonna 10x like tomorrow. Like, if it's not like that, people don't click on it. And it's like, dude, you need to hear all of this stuff because you're about to get your face kicked in next year kind of thing.
Facts.
And nobody clicks on it. It's like, dude.
Like, literally, I that's one of the balancing acts of, like, YouTube is like making content in such a way. I'm so impressed with, like, people who are able to. There's Joseph Carlson. I don't know if you know his channel.
Yeah.
Yeah, he started out being, like, just a dividend investing guy, right?
Totally,
like, for the longest time, he was dividend investing. But then, he still does dividend investing. But, like, I think, I started watching this channel, like, early 2020. And one of the things I liked about his channel is, like, he doesn't, like, for some reason, he was able to, like, break through the mold without ever having, like, crazy thumbnails, without ever, like, doing any of the crazy, like, buy these stocks. And I was like, how is he able to do this? But, when you start at a certain point in time and you build that audience up, then it's just kind of like, oh, you can do it. For the rest of us, we have to break through, like, something to make you click. And then something to make you watch for a while so that I can, like, infiltrate your mind and deposit all of this good stuff in the crevices of the video so that you can actually, like, hear what I'm trying to say.
Yeah.
Which one person that sort of does that sometimes is Andre Zick, but sometimes he doesn't, which is like, he does it sometimes where he's like, oh, I'm talking about all this flash dash, but it's like, I'm only really talking about index funds, but still. It's like, but yeah.
Yeah, dude. It's hard, but I think for what was his name? Carlson. The dividend guy. What was his name?
Yeah, Joseph Carlson.
Joseph Carlson. Yeah. I think one of the things that makes it attractive to click on is that every video you can see his portfolio value in the thumbnail, and it's like it feels like a video game. It's like or like growing a plant or something. It's like seeing that progress is so
Mm-hmm.
satisfying for humans, I think. And so it's like, what
That's true.
he's up like a couple grand this week. Cool. What did he do? Or
Mm-hmm.
what information is he
Yeah.
acting on? And I'm like, I've polled my audience, and people are like, please make a public portfolio. And I'm thinking about doing that. And
Mm.
but I don't know how to do it in a way that's like, um, yeah, I mean, I guess I could just show the value of it without showing all of the every single trade that I'm doing
Mm.
at like 3 in the morning here when I, kind of thing. When I'm not sitting down at my computer to write a thesis out on why I did this or that kind of thing.
Yep.
Yeah, dude.
Yeah. That's one thing that I mean. I started. So when I found out about M1 Finance and I started using M1 Finance, I was like, yeah, I'm literally going to create a portfolio and do monthly updates because I don't have that much money to be throwing in here. I do monthly updates and show people like you can start small and build something. So
Yeah.
and literally that's the goal was like I'm not throwing most of my money goes to what my Roth IRA and those kind of things. This is like a practice in front of people's face of like, look, this is investing. It's boring most of the time. There's mostly nothing to talk about except for like, oh, talk about Apple doing something crazy this week, or let's talk about Netflix raising prices and now everybody's pissed about it.
Yeah.
But stuff like that you throw into the videos to make it entertaining. But generally, investing in and of itself. I heard Monish Pabrai, which is another I quote a lot of people, by the way. So for anybody, for everyone who's listening to this,
yeah, he's the super famous Indian guy, right?
Mm-hmm, yep,
Yeah.
yep. He has a quote that he says that if you're willing to watch paint dry and find it entertaining, then you're ready to invest.
Seriously, dude.
So because it's like, oh, that's extremely like just to think about like investing is, and then you combine that with what Charlie Munger saying where he says that investing is not in the when you make money in investing, it's not in the buying or the selling, it's in the holding, it's in the waiting, it's in the boring stuff.
Yeah.
And so, I mean, so investing is like I wanted to make that portfolio of just like, yeah, I put another $50 into this portfolio. Oh, how surprising! I bought more Intel this week because it's still undervalued in my perspective.
Yeah,
it's like the most boring thing that nobody wants to think about. But to me, first of all, I find that was the way that got me started.
Yeah.
And I think there are people who are looking for that information and trying to wade through all the noise. And it's like if I can find a way to just like reach out to those people that are like, especially now, they're going to be looking for that because, markets are pain, especially once this thing goes to really, really bad spots. People are going to be looking for hope everywhere. And so they're not going to be looking for like, oh my God, I need to buy this stock now. It's like, yo, what is happening? I need somebody to calm me down right now. So that's the hope, but we'll see though.
Yeah, seriously.
Yeah.
I think another tricky thing for a lot of investors, not even just new investors, is I think people feel pressured to always be doing something, whether it's buying or selling or finding the meme stock on Reddit or like, Jim Cramer just did this thing, so how can I act on that or whatever. And as a YouTuber, it's like I have to be thinking about content. I have to be doing something to, put something out there for my viewers and stuff. But it's like you were just saying, it's not necessarily about the buying and selling, And sometimes I like tend to be like, yeah, I think I got it I think I sold out near the top, or like, yeah, I think I bought it near the low or whatever. But in reality, my really big winners are the ones that I just kind of slowly dollar cost averaged into and held for like 2 or 3 years kind of thing. And then it's like up like 8,000% or something like that, and it's like life-changing money now. But a lot of the ones where I'm like, oh, I feel like I got to do something. I feel like, oh, something's happening in the market. I'm just going to sell, dude. And then it's like, you look at your realized gains and it's like, cool, I made like 0.8% on that. And it's like super not that meaningful. Yeah.
And so much more heartache. It's just like so much more work and so much more heartache.
Yeah, dude.
To just be so busy in the markets. It's just like, you know what? I'm just gonna be okay. I'm not gonna do this to myself.
Yeah. So in your position, you're an engineer, right?
Mm-hmm.
Yeah. So, um, are you just kind of like I receive X portion of my salary every month, and I automatically invest that into A and B and C, or are you more in the mode of like I'm just gonna save up a bunch of cash because I think the markets are gonna fall apart. Then I'll go all in with that cash I've saved up. Like, what's your strategy right now?
So I have my entire most of my money is automatic. Like I don't
Okay.
even, to be honest, unless it's like to do with like the single stock portfolio that I had. Most of my money just goes into index funds within my Roth IRA or my 401k or my HSA, and it's literally just automatically I get paid a portion of the money. I don't even see it, so it's like my salary says this much, but really I only use like way down low, and it's like where's all my money? But it's like automatically gets invested. So I don't. For me, I don't care if the market is up, if the market is down. I don't want to wait. The money is just going to go in
Yeah.
because I'm what is it? It's over the next. I'm 27 right now, and I'm looking 59 and a half if I have access to that money. So that's 30 years down the road.
Yeah.
So to me, I believe the world will be in a much better place. I don't know how we'll get there, but the world will be in a much better place 30 years from now, as long as there are people like Trey in the world, as long as there are people like me in the world who are working hard and doing all kinds of different things to make the world better. The world is going to be in a much better place. So because I'm an eternal optimist in that way, I'm just like, all right, cool. Like I'm going to just let this thing ride and get to where it needs to get to. And then I have some money that I then try to do okay, let me wait. Like it's a smaller piece of my entire portfolio. Let me wait and try and pick like, okay, it's a good time to buy Intel today. Okay, it's a good time to buy, by the way, this is not personal advice, Disney, or it's a good time to buy Netflix, or it's a good time, now I get picky about when I'm doing it. But for general investing, I just dollar cost average into index funds because if the market is going down, then beautiful. I dollar cost all the way down and I get to accumulate more on the way down. And if the market is going up, beautiful. The amount that I accumulated on the way down is getting bigger and I get to buy more as it's going up. It's like a win-win situation for me as long as I'm just going through the motions. And so for me, I'm not, when it comes to that, it's just like a very simple automate the thing. I'm not even paying attention to it. I don't look at it. If it was having a wonderful year, great. If it's not, whatever. Like as long as I don't see it, it's good. The only thing I see is the same things that I show on YouTube all the time. Those are the portfolios that I see all the times because those are the ones that I actually like bang my head against the wall to try and like beat the market and all that and like get a nice little return. But really, it's just like, and it's just because I find it fun more than anything else. But I just want at the very least, let my future be secured, and then I can do stuff on the side that if I some reason hit it big on one of these stocks and they just explode on me, and then I'm able to like retire and go see Trey whenever I want on my private jet or something like that. I'm just kidding, by the way. Then it'll be great. But apart from that, it's like at least let me guarantee one side of the equation for myself.
Yeah, dude. So basically, the majority of your money set aside for investing is automatically invested into index funds, which tend to trend up long term over time. And you keep a small portion of your investing money to basically play around with and be a little bit more, I guess, high stress with. But if you mess up, it's not going to end you. You still have the retirement stuff set up. That's good. Yeah,
exactly.
Good.
Yeah, it's something. It was something I read. It was like the Pareto principle, which is like 80% of your results come from 20% of your efforts.
Dude, yeah.
And then 20% of your results come from 80% of your efforts. And I was like, I read that and I was like, that's pretty interesting. And it comes true in so many different parts of my life where it's like the things that I focus so heavily on, it's like ends up being like, oh, didn't work exactly the way I expected. But then the opposite is also true. So I was just like, let me see how, if like, and that's the other thing, like even especially with investing, it's like, the more effort we put into it, it just seems like the worse things are. So it's like the more we try to like time things, the worse it gets for us.
Exactly, dude. I feel like, and that's kind of like what I was saying earlier. I feel like a lot of the newer investors who've been in only since 2020, in 2020, it would have been easy to come to that conclusion that the more active I am, the more money I make, because it's like every single thing is going up like parabolically like every day kind of thing, you know?
Yep.
But it's like actually in the long term, like that's not the case. Like in fact, I would encourage most people to like just put money in and throw your phone away. Like just never look at it again kind of thing.
Mm-hmm.
Yeah, dude.
Yup. Yup.
So,
That's literally my like. So that's literally my mom and my mom wanted to like finally like get her stuff situated, and I was like and my mom doesn't do anything. All I told her was like, oh, just do this and put it in the market and forget about it.
yeah.
And she outperformed me trying to pick stocks and do all of this stuff, and she just destroyed. It was like the most basic, like laid back way of investing, and it was just like that really like cemented it in my head because
Yeah.
I was managing both portfolios, and I was like looking over her stuff to like help her set it up. And I went against my own advice in certain ways and did a different thing for her because I was like, I gotta be as safe as possible because retirement and all this stuff. And I was just like, I saw her portfolio and I was like, so this stuff actually works when you just leave it alone for a really long time and you stop tinkering with it all the time.
Yeah.
It actually really, really works. And so that cemented it in my head of just like, you know what? Automate the thing and just don't pick it up. Don't look at it. Just let the thing ride.
Yeah.
And if you let that thing ride, you give it enough time. Time is your best friend when it comes to compounding. And so you just let that thing ride. You have enough of a time gap, especially for most of you also that are watching this and most of us we're all around the same age. We got time. So there's no rush. And I think that's the main thing is like when we're young, we're in such a rush. Like, I got to have this thing like right now. And it's like, do you actually need it? Like, come on now. Yeah.
Yeah, seriously. I guess following up with that, do you have what would you say is your biggest investing mistake of the last 2 years?
Biggest mistake. I would say the biggest mistake I made was ignoring the things I knew not to. It was ignoring the fundamentals and just going with the hype or buying into the hype.
Interesting.
So, like, I'll say like 2020, I really like that's when I really like started following a bunch of different YouTubers and following everybody. That's how I found your channel, and I was just following too many people, and everybody has their own thing.
Yeah.
And I was just like, yeah, that guy said something about this stock. And, I was just kind of getting blown with the wind and going all over the place. I mean, at one point I was buying, so I knew like ARK. So when ARK was flying high,
yeah,
I knew going into it, it was dumb. Like I was having a discussion, Tolu, right? You know Tolu?
Totally, yeah, yeah.
Yeah. So I was having this discussion with him talking about like why this is a dumb reason to buy into this thing.
Yeah.
And then I was like, but I'm still going to buy it. It was like, this is so dumb, but I'm still going to buy it. Luckily for me though, I was able to like get out flat because I got into it and then I was just like, okay, I'm out. Because I read a couple of excerpts and a couple of blogs where they were talking about this is why most investors don't make money, even though they buy into like ETFs or mutual funds or anything, because we usually buy at the top.
Yeah.
And then because we buy at the top, things start to change. The strategy may not work for the manager anymore. And then all of a sudden things start going down and then people just start panicking and they sell out as well.
Yeah.
And so when I thought about that, I was like, oh man, I need to figure out something. So I sold out of that and went back to like my basic stuff. But like at that point in time, I was all in on like listening to Jeremy from Financial Education and a bunch of other guys that were just talking like they were all talking about the same things basically. And it was always like these small companies. And at that point, I hadn't put two and two together of like, look, this guy is a millionaire. Like he's got money out the wazoo. So when he talks about putting $20,000 or $30,000 into a stock, that's a very small percentage. That would be like me talking about I put $200 into a stock. It's not going to make a major difference in the long run.
Totally.
But after that was like my biggest mistake of just following the herd for the most part. Just being like, oh yeah, like everybody is hyped about a Palantir or Tattooed Chef today or whatever it is,
Yeah.
and just being like, let me just follow with them and
Yeah.
buying into the story. I mean, I would even say like, even though Dropbox treated me well, like I did well with Dropbox. Thank you, by the way, for that. That was from you. Thank you very much. Made a nice little percentage on Dropbox. Thank
Excellent.
you very much. But even that was a mistake. Even though I made money on it, even that was a mistake because I didn't really do research on it. I didn't really understand it. I didn't really have a conviction around it. I just bought it because Trey said it was a good stock. So I was like, sure, and just jumped into it. And so that was like one of the mistakes, and it was like really calling. Like it was literally I spent like a good 2021, especially after the GameStop saga. Like I spent a good amount of time just being like, okay, who do I actually want to be listening to on a regular basis? So there was a bunch of channels that I was just like, nope. Like I unsubscribed a bunch of people, unfollowed a bunch of blogs, and followed a bunch of people on Instagram because I wanted to like curate what was entering my head. I wanted good information coming in my head, and a lot of people were just not doing that because, like we talked about earlier, no fault of their own, they have to feed the beast that provides money for their family, and so they got to create content that people will watch to feed that beast. So, and I was like, that's cool, but I don't have to be a part of that. I can be a part of being wiser in the decisions that I'm making. So that's probably the largest mistake that I made 2020 to 2021 when it just got started. So
good, man. That's cool. I think that's a good lesson, and I think a lot of people probably haven't really learned that yet. I did a video actually about Jeremy, and I've learned some stuff from him, and I think if I lived in Vegas where he was, it would be great to chill with him and be buddies and stuff like that. I don't dislike him, but in the video I was like, there's a few different things that you guys need to be aware of. Number one, he makes probably like high five, if not six figures a month from YouTube. So when he's like, oh my gosh, all in, he says all in for everything. But when he's like, oh my gosh, all in on Tattooed Chef, I just put in 200 grand into Tattooed Chef. For most people, it's like, wow, all in means 100% of everything he has. He's just put into Tattooed Chef. Oh my gosh, I should get in. It's going to go up. But actually, you know, if you step back and look at his portfolios and his action over time, he doesn't mean 100% of his funds ever are going into Tattooed Chef. And 200K is like, you know, the average person putting in $200 into Tattooed Chef. And it's a dangerous kind of game to play. But that's one of the downsides about YouTube. It's like you have to do extreme crap to get clicks. And a lot of his audience loves him, you know, and it was interesting seeing the feedback that I got on that video in the comment section. A lot of people were like, wow, good points. I never thought about those. But a lot of people were like, F you, Jeremy is God kind of thing. It's like, okay, I mean, you're entitled to your opinion, but I'm not sure that's going to work out for you long term kind of thing. Yeah.
That's definitely true. I mean, I think I watched that video, and that video was like, that was part of like the process when I was going through of just like, like I have to be very much. That was right around the time where I just like started removing people off of the sub box, and like, before that, I was subscribed to every single one of his channels. Like I was watching everything all the time.
Yeah.
And I mean, it just gets to a point where you have to like you said, like you have to be realistic with what it is that he's saying and what it is that he's doing, and put it in perspective. I mean, he made a video, and at the same time, the other thing that I liked about Jeremy was, even though he made those videos, he also had videos where he would talk about like, yo, guys, be careful. Index funds are a good thing to be buying.
Yeah.
Make sure you're taking care of your finances. You're paying off. Like he said all that stuff, but at the same time, you know, it's hard. Like a lot of times when you make 1 versus 100, at the end of the day, the 100 will always outweigh the one video that you make talking about like good personal financial habits.
Exactly.
And so like, it was just like,
nobody wants to click on that anyways, right?
Exactly. And so he's not getting the feedback that he needs to make more of that type of content. So he's just like, all right, like I'll make it once in a while, but it's on you to figure this out. And he's also like, I already made that content. It's like the old artist. It's like an artist who's been around for a long time, who changes his style up.
Yeah.
Everybody's like, oh, we used to like your old music. It's like, well, that's fine. Go listen to the old music then. It's still there.
Yeah.
Type of thing. Like the music is still there. You can still watch those old videos, but he has to do what is in mind right now, what is in present. Like YouTube is not about like, oh, I make great videos, which is still good. Like one of the things that I'm learning also is like good green evergreen content is great as well. But sometimes you got to make content for what's happening today and right now.
Yeah.
In order to like at least pick up some of those viewers who'd be like, you know what? I like the way Trey presents information. I like this thing that he talks about sleep well at night because he lives in Japan stuff. I kind of like that a lot. Like let me latch on to him and learn more about his process and learn more about how I can do this. So, but you know, I always think of like the Bible verse with Paul where he says, I will be all things to all men so I can win a few. And it's like in the same way, and if we want to teach people good habits, sometimes we have to go to them where they are rather than asking them to meet us where we are so we can figure that stuff out. Otherwise, we're just like, we're kind of wasting our time, essentially.
Yeah. Yeah. It's tricky, though, because, like, I'll do videos. I'll try to put together videos of, like, hey, guys, this is, like, war in China. Or, hey, guys, the Fed is doing this. Or, sorry, not war in China. China and Taiwan. Or Russia and Ukraine. Or whatever. And people are like, who is this Putin guy on the thumbnail? I don't get it. It doesn't pump me up. And I'll get, like, 5 views on that video, you know. But if I'm like, Palantir to the moon, I'll get, like, 3,000 views. And it's like... You know, and then people will come back and talk smack and be like, why did you buy skills? You're so stupid. Oh my gosh, I bought it because of you. It's your fault. And I'm like, dude, like all of the videos that I've made, I talk about how skills is like 2 or 3% of my portfolio. You know, I'm like, did you buy anything else? Did you buy Intel? Because Intel is like, or did you buy AMD, which doubled this year? Like, why are you going to only pick one thing and make that your whole portfolio? That's like the best way to guarantee failure, dude. Yeah.
That's, I don't think like people have. I think part of it is just like I think part of it is like people have a warped view of what success looks like.
Yeah.
In the sense of, I think we all do. In all honesty, I think sometimes I have a warped view of success as well.
Yeah.
And just like we see people, Elon Musk make these super bets of like, yeah, I'm just gonna go all in. Like he sold his old company and buys Tesla and is all in on Tesla and all in on SpaceX.
Yeah.
Or we look at people like Mark Zuckerberg and it's like, oh, he built his entire wealth with just Facebook, and we all think like I can do it too. But the things we forget is like we're not Mark Zuckerberg, we're not Elon Musk, we're not these guys.
Yeah.
Who essentially built massive businesses that we use every single day, and it's like. If we have to just come to terms with just like, this is who I am and accepting who we are more than anything else. And I think sometimes it's hard for us to do that, of just accepting like, this is where I am. This is who I am. I don't have to fit some narrative, or I don't have to match up to other people's things.
Yeah.
And just, you know, to be successful in my own way.
Yeah, dude. And I feel like, like Wall Street Bets, there's a lot of interesting dynamics that have come out of Wall Street Bets. But one of the things that I think really jacks people up is, well, first of all, the idea of loss porn, where people will post like, dude, I just lost my whole I just lost my whole net worth on like, you know, FDs that, you know, options that expire like tomorrow. And I went all in on it and it didn't go the right way. Now I'm screwed. And people are like, dude, lol, that's awesome. Keep it up, kind of thing. That's one thing. But then the other thing is the other side, where people are like, dude, I just turned $80 into $80,000 in like 2 days. And people think that's a reliable, dependable strategy. And then they're just dumping $80, you know, a week, and it never ever works out. And they're like, investing's stupid. It's like, dude, we got to start with the fundamentals. You know, you got to learn how to crawl before you learn how to walk, before you learn how to run, before you learn how to do a triathlon. Like, yeah. Yeah,
that's facts.
Yeah, dude.
That's a big thing. I definitely agree with you on that.
Yeah, but it's tricky because the whole idea of Wall Street Bets, like, there's never really been a forum where millions or tens of millions of people can make a decision together and then impact the market so drastically as
Oh,
Wall
that's a
Street
good
Bets and
point.
GameStop did, and so
Mm-hmm. Yeah.
there is validity, and I think a lot of the people have experienced some kind of gains, some kind of victory from being like,
Mm-hmm.
oh, I read this thing on Reddit and everybody's going all in on AMC right now, so I'm going to do that. This
Mm-hmm.
equals like a sound strategy, or this equals, big money or success or whatever. And it's not always going to work out that way, and I think
Yeah.
after that works a couple of times, and I mentioned this in the Jeremy video too, once the hedge funds or the big money know everybody is watching what Jeremy is going to invest in, or everybody's watching what Wall Street Bets, what's trending on Wall Street Bets, they use that
Mm-hmm.
information. And now they can, and
Yeah.
if, for example, like I think I mentioned this in the Jeremy video, like if Jeremy's saying, I'm just going to buy this thing until it goes down to $5 with Tattooed Chef or Cruiser or whatever, or Cruisy Doozy, whatever it is. Um, the keyboard maker or whatever. um,
I don't. Yeah.
yeah. If he's declaring to the world, I'm going to be putting like $500,000 into these stocks permanently forever, even if they keep going down, 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 other people are like, dude, that's free money for me to take. I can just short this
Mm-hmm.
because Jeremy's going to be putting in at least, this much money into it. I just short it and then buy back. And it's like, kind of the bigger the YouTuber is, the harder it is to actually get value out of their moves because the hedge funds are watching these things now. So it's
Yep.
it's really tricky, and that's I think one of the advantages of watching smaller YouTubers who actually do good research. Yeah.
Yep. Yep. That's facts. I mean, even if we take that from a Jeremy YouTube level to like somebody like Warren Buffett, there's something called the Buffett bump, and he had to get like the federal, what was it, the treasury, was it the treasury or the federal, one of the big people to like give him a gap to be able to like not announce, because now if you manage a certain amount of money you have to announce it, all the big hedge funds have to announce their positions and everything.
Totally. Yeah.
But like if he's building a huge position in like Apple, for example, every time he's about to buy into something, he has to like tell like, hey, can I get an extension before I announce any of these moves that I'm making? Can I get a longer extension? Because there's always a Buffett bump, and he doesn't want like, I'm buying it for these cheap prices, but because I'm buying it and other people know I'm buying it, they're gonna rush and buy it too, and then now I'm lost. I can't buy it anymore. And so I mean, like strategy. I mean, and that's the other thing is like strategies go in and out of favor all the time.
Yeah.
It's like meme stock investing was all the rage. Like SPAC investing, you had the meme stocks that first started, which went from stocks to crypto memes, and then from there then it became SPAC investing, where every SPAC that got announced exploded in price. Then we had EVs for a bit, so it's
Yeah.
like, strategies work for a little bit. And if you're not on top of the trends, which is why I can't do it, because I got like if you have a full-time job,
Yeah.
or you're a student or any of this stuff, like you can't keep up.
Yeah.
There's no way you can keep up with all the different moves to know like, okay, where's the crowd going next, to be able to get all the money out of it. Oh, they're over here. Oh, okay, cool. Let me run over. It's like, that's a lot of work that you have to put into it, and I'm too lazy. I'm just be 1,000. Like, I'm just too lazy to put in that amount of work to just make stocks, where on the other hand, we can just buy a stock and just wait. It's like, all right,
Yeah.
cool, if I do good research, I'll be good.
Yeah.
So
And that's the low stress way to
it's
do it.
just
Yeah.
the interesting.
Yeah.
Facts.